Hey guys, for more like this, don't forget to hit the subscribe, the like, and the notification bell. Hey everybody, it's Kevin at NorthStarBadCharts.com, and I'm back to address some issues with cryptocurrencies. If you have been chopped around and chopped up and lost money in cryptocurrencies over the last 6 to 12 months, and you're sick and tired of following these crypto accounts that are continually proclaiming that the bottom is in and that cryptos are going up and the low has happened, and you're just exasperated at all of the false narratives and all the ridiculous stories that have been coming out month after month after month after month, all these reasons why cryptocurrencies are going up, and yet the price action goes down, and you just see your account getting wiped out. If you want to change that, and if you want to understand what's going on and really understand how to use evidence rather than chasing false narratives from accounts who are being run by people with absolutely no experience in market analysis, then watch this little video and just hopefully learn something and use it to help you in the future. That's what we're here for. At NorthStarBadCharts.com, we do the hard work for you across all of the markets: cryptocurrencies, precious metals, base metals, energy, currencies, and stock markets, and everything in between. So we do all of this for hundreds of charts, literally. And if you like this kind of analysis, then by all means, take a look at our website and come join us. But so what I'm going to show you now, I'll stop sharing my ugly face there, and I'll put the screen on. Just make sure I'm sharing the right computer screen here. Right, here we go. Okay, so what I want to talk to you about, as I say, is cryptocurrencies, and this is the type of analysis that we do, as I say, across all of the markets. This is the crypto total market cap. So this is the total amount of money that's tied up globally in cryptocurrencies, be it Bitcoin or Ethereum or all of the altcoins. This is the sum total of everything. And it goes back, of course, several years, but it's important. First thing is to note is that it doesn't go back anywhere near as far as the price charts for other things like oil or precious metals or the stock markets. So crypto total market cap chart on TradingView goes back less than 10 years. Okay, but we can draw some conclusions from this, and we can see these repeating basing formations. I've highlighted them with these orange arcs, and don't be too worried if this is all new to you. Just focus on the orange arcs. There's one down in the bottom left-hand corner. There's another one here in the middle, and another one that we might possibly be in the process of forming right at the moment. Okay, so that's one thing to notice. Another thing on the chart here is the moving averages, and I think I've got these set. I'll hide the 12, and I'll just highlight the 30. What I want to do is highlight the 30-week moving average for you, because it's pretty important in cryptocurrencies, 30 weeks or 200 days. And you can see how this 30-week moving average, when it broke down back in 2018, it signaled the onset of a bear market, and then gradually the crypto total market cap clawed its way back above that, and then the bull market took hold. Once it starts to get back down below that 30-week moving average, it's starting to show some weakness. Although we made a marginal higher high here, the die was cast, and we broke down again and back tested the breakdown, just like we did back here. Actually, we broke down, kind of back tested that moving average area, and then down we went. And same thing happened here. It's a more sort of precise test of the moving average itself, and it also sort of tested this green zone, which is called the Ichimoku cloud, which is another technical analysis tool that we use. I don't want you to get too sort of frightened by these terms, because you know, as I say, at the website, we do this analysis for our members, and we simplify the information that's coming from these charts. And in this particular case, we've highlighted the buy points, the sell points, and the important confirmation touches on these arcs. You can see these orange circles here. They're each confirming a touch point on a perfect geometric arc. And I just noticed a number of months ago that we were starting to do the same thing again. So we could possibly be developing a new arc, although it's early days yet, and we don't know for certain, and we can't quite position the arc precisely. But the key point on this chart is this back test of the breakdown, and then a further breakdown below the support line. So somewhere up at around 2 trillion market cap, it was fairly clear that there was weakness beginning to show. And when it fell below 1.7 trillion, then that was a very clear final warning back in April. Although, as I say, there were earlier signs during the very early part of this year. Anybody that wasn't drawing your attention to those warning signs really must be ignored. Their technical analysis skills are clearly very poor, and they are either unaware or so biased that they just ignored these warning signals. Okay, very clear, strong warning signal there when Bitcoin was $42,000. That went out to our members, of course, and then when the final breakdown occurred after that, those were the last warnings. And of course, Bitcoin has fallen by 50, 60, 70% since then, and other cryptocurrencies have fallen even more, some as much as 99%. And of course, all the problems with the exchanges that we've had, most recently FTX. So what is this chart telling us? Well, what it's telling us is that now this horizontal support line, which has been a key horizontal support line in the past, has been broken below. Okay, this level around 840 billion, we're now below that. So as long as we remain below that, it is very bearish, and we could easily come all the way down to somewhere around 400 billion. So a 50% drawdown on the overall crypto market is entirely possible at this point. It might not be as much as that, or it could be even more than that. We just don't know. A lot depends on external forces in the markets that we are not necessarily able to predict that far ahead with that degree of accuracy. But the important point here, and I'll keep stressing this, is to wait and be patient and wait for the evidence. The 30-week moving average is the first sign that things will be turning bullish. So price has to get above the 30-week moving average. If it doesn't do that, then we're still in a clearly defined bear market. And I'm going to go a little bit further than that and say that this wake-up line, this declining dotted line, which is currently somewhere in the region of 1.2 trillion, that's the final confirmation or final test, if you like, or one of the final tests that this chart has to pass in order to suggest that a new bull market may be starting to develop. Of course, a new bull market will take us up and out of this arc and up to some figure, way beyond the top of this arc, just like it did in the past. That's how bull markets work. Okay, so there's no need to have fear of missing out. Play it much safer. Don't take risks. Enter when we break above the wake-up line, and ignore ridiculous narratives. There are all sorts of reasons that have been given in January and February and March and April and May about why the bottom was in and why Bitcoin couldn't fall any further and why crypto total market cap wouldn't fall any further. You just have to dig back into the crypto accounts, the ones I'm talking about that have 100,000 followers, 200,000 followers, or even more in many cases. A lot of talking heads were saying in June and July and August that crypto had bottomed. Crypto is going up to 100,000. The bear market's over. Wrong. It was wrong, and it was wrong again. And there's a reason why it's wrong. It's because bad things happen when you're below the key moving average. You cannot second guess what is going to happen when you're below a key moving average, particularly with an investment that hasn't existed for more than a decade, or much more than a decade. So, and many of these cryptos, of course, have only been around a very small number of years. So they haven't existed during a period when stock markets have been getting outperformed by, or where stock markets haven't been able to outperform inflation, and where stock markets are not able to outperform precious metals, for example, which has been the case recently. So stock markets breaking down, particularly versus inflation against PPI, is another big warning sign. because cryptocurrencies have never had to deal with that. And so far, they have been behaving as a tech stock, as a tech play, and they haven't decoupled in that sense. If and when they do, I'll be first to, point that out and start cheering and being bullish for cryptocurrencies. I'm not anti-cryptocurrency. I'm anti-bad technical analysis. I'm exasperated by the lack of clear evidence gathering, and I'm exasperated by the amount of bias that's being displayed, and totally ignoring all of these breakdowns and being told to dollar cost average is another one, or hodl, or buy the dip. Why would you do that and then watch your purchase fall another 30%, 40%, 50%, 60%? What's the point in doing that? I don't get it. It's like some kind of cult. You would have to be completely ignoring all of the evidence to be doing that. And as a scientist, I'm hardwired to not ignore the evidence. You can't turn your back on clear evidence. These are probably the same people who are believing all sorts of conspiracy theories, because they're ignoring evidence. And if you ignored the evidence here, and you ignored it here, and you ignored it here, you're probably still ignoring it now. Wait for the evidence to start suggesting that the bull market is starting. I'm starting to sound like a broken record here, but I hope you appreciate why I'm saying this. I'm just trying to help people avoid being completely wiped out. Many years ago, before learning about how to use technical analysis, and before gaining all the decades of experience in my career, I made the same mistakes. I'm just trying to pass on that sort of learnt knowledge, so that others can kind of shortcut the route to avoiding huge losses. Anybody that did buy the dip or did sort of dollar cost average, if you want to call it that, it's just seeing the money that they put in sort of wiped out even further. So follow the technical analysis, follow the evidence trail, and don't be impressed by bold sounding clever statements from whatever cryptocurrency account. It might sound boring, it might sound tedious, but I'm afraid science and evidence can be sometimes. But on the flip side, it can save you from losing all of your capital and your investment. So I hope you found that useful. And the other thing to point out here, just before I go, is look at the stock RSI. I've not mentioned that yet, but this is on the weekly chart, and the stock RSI. Look what happens when it gets down into this low zone down here. Each time it does that, price plunges. It did it again here. What happened to the crypto total market cap? It went from 1.3 trillion to 0.8 trillion. So I don't know what's going to happen as this plunges even further, but it's safe to assume that any uptick at the moment in crypto total market cap is unsafe. It's not backed up by evidence. We've got the wind in our face instead of having the wind at our backs. And I've said that many times. As long as we're below these moving averages, we're trying to fight the tide by going long in the cryptocurrencies. You need the wind at your back, and the wind won't be at our back until this weekly stock RSI is in a bullish configuration, and we're back above at least the moving average, and preferably the wake-up line. Okay, so that's it from me for now. As I say, if any of that struck a chord with you, then please follow me some more on Twitter, or even better yet, take a look at our website. We have actually got a 50% lifetime discount for anyone joining during our Black Friday deal, which actually lasts through the whole of November. So if you want to take advantage of that, then fill your boots, go for it. Okay, that's it from me for now, and speak to you all again very soon. Bye bye.